So I'll talk about what I'll repeat what I said the last 5 minutes while I was talking. Perhaps we weren't recording here. On Monday, we were here in the Dixie. I said, do not get carried away with the long bullish side of the dollar index. We were right. I was right the day before. I prepared you for a turnaround Tuesday. This wasn't as significant. I didn't think it was going to be as significant as this inflection point was. The main point being that I said I favored buying dips in the euro, 1380, 1350. We're now above 114. I talked about booking profits in USD CAD, 129, 130, now challenging 28.27. Talked about that the yen might have another 90 pips to the upside to 61.8, hit it to the pip. So a lot of the calls that I made on Monday are working. Hopefully you were able to take advantage of a few of those calls, not the home run ball type activity that we had from last Tuesday, but still keeping you on the right side of the market. And as I was saying last week, you don't know if you have a low until you get a pullback, put in a higher low, and then take out this high 94.50. That'd be a pretty solid signal. So for now, it looks like we could trade 93, 92.5, and then see if we could generate a C wave. Maybe this is A, we get a B, and then get a C. But you also can't rule out that we just have a washout here in the dollar and the euro. Remember, I was talking about the grand prize to shake out the last remaining bears in the euro. Our stops over the 117 level, and 38.3 back is 118.30. So I'm not ruling out that scenario either. But if you took my advice, you got out of Canada good. Maybe you played the reaction there. You bought the euro. I was preferring the euro long over the cable because I was looking for strength in euro pound, and that's manifesting too. And if you rode the long side of the yen, you should be out. So some accurate forecasts again on the dollar from Monday. And even if you didn't catch this little pullback in the dollar, don't worry about it. You're going to miss trades every day. And here's a little motto that I'd like you to write down and keep on your computer, because I'm not making any long-term macro calls right now. We're going to take things a step at a time. So right now, I think we could pull back towards 93, maybe 92.70, and we'll see there. But what you should write down and have it on your computer or whatever device you trade on is this: do the right thing today, and tomorrow will take care of itself. So don't worry about tomorrow. Just do the right thing today, and if you continue to do the right thing every day, tomorrow will take care of itself. That's the point. Give me a Y if you're with me and you understand that I called this turnaround Tuesday 24 hours in advance, and then I said do not get aggressively bullish a dollar. 94 to 94.5 was going to be a wall to get through, and it's been turned back so far. I think there could be more left. Give me a Y if you're with me. Part of the reason was I thought that you wanted to be out of Canada's, that crude might not have peaked and could pop, and Canada had come a long way in a hurry, almost 500 pips in a week, and here we go. So we got that turn yesterday in crude. We're headed to new highs. Looks like we could go, I don't know, 50 possibilities. So you really can't rule out. It's going to be a very important test in the Canadian around 27.5. If you shorted it up there, you already have some pips made. Perhaps we hold 27.5. This to me looks like we're setting up a blow off in the oil market. I think a lot of it has to do with what's going on in Canada. A lot of oil has come offline with those fires in the tar sands. So here you go. Crude looking okay. Looks like it wants to blow off, get some type of third drive. Maybe it has another $2 to $4 left on it, and we'll see what it looks like there. But from Monday, it was the right call to lighten up on long USD CAD, because as crude goes up, it actually strengthens the CAD, and when we have USD CAD paired the way it is, it means lower USD CAD. Give me a Y if you're with me. Understand the correlation and the call I made Monday on USD CAD and how crude is confirming this pullback in USD CAD. So the other one was gold. I thought maybe gold had it. Jury's still out, but you know, if we get this flush in the dollar one more time, that would kind of line up with gold having, you know, one more push up towards 1320. That to me looks possible. That's why I was saying, you know, don't be too aggressive on the short side of Aussie, that you'll have better selling opportunities. And we weren't quite at my buy zone, so, you know, I may have missed the low in Canada, but if you notice, Aussie's been the weakest currency against the dollar, with what the euro did in the last couple of weeks with the dollar sinking. Aussie hasn't made a new high for quite a few weeks now, so it's still displaying some relative strength. So we'll see what kind of rally we could get out of Aussie. Maybe it's going to set up a nice short opportunity in Aussie. Give me a Y if you're with me on the gold and the correlation with the Aussie. So here's your S&Ps. They're selling off. I don't know if the S&Ps want a stronger market or a stronger dollar or a weaker dollar. I always thought that it wanted a stronger dollar because it would create money inflows, but the other flip side of the coin is a weaker dollar supports energy, supports commodity prices, raw material prices, and that is also a big, oil shares are a big part of the S&P. So we're going to see what happens here. I'd say closes back under 2020, sets us up for targets I've been talking about for a while, back down towards 1960, 1950. The bears are saying we could pull back and then rally one more time towards 2120 and then a big break. So I still favor selling the rips rather than buying the dips at this point. I think there'll be a nice low in July in the indexes, and perhaps some of this instability on the political front here in the U.S. starts to affect confidence in the market. Give me a Y if you're with me. And correlate risk on, risk off with the yen. So if the market's going to start rolling over, that could affect U.S. dollar yen and the treasuries. Here's the treasuries. Talked about that they look like they could have one more blow off to the upside. They're acting okay. So perhaps we get this blow off, and that would imply that the yen's at least going to pull back and possibly even retest that 105 level or even take it out. So give me a Y if you get the risk on, risk off. Normally when bond prices are going up, the yen is getting stronger and U.S. dollar yen is going down. Okay, risk on, bonds are going down. U.S. dollar yen is going up, yen is weakening. Give me a Y if you're with me on my correlations of all the outside markets, oil in Canada, Aussie and gold, U.S. dollar yen with the S&Ps and the bonds. Everyone with me on the outside markets? Okay, let's move to our instruments. Starting off with Euro USD, here we were Monday, and I said we're starting to diverge in here. And, you know, even though we came off this 116 level, when I called that bottom in the Dixie, Euro came off not as strongly as a pound, but to me, this is looks like just another pullback, and we could rally again. Again, you know, the major, the grand prize here. I could either go way back in the daily. I'll show the weekly. Something I've been talking about, that if the dollar has one more decent break, that we could trade up towards 18.25 and clean out the stops over this high of 17.13. That's where your intermediate term bears are going to throw in the towel. People that are saying we peaked last week and we're going to head down towards 110. Not so sure. Let's get to the shorter term look of it. And what you see happening, this was the NFP high here. Okay, this was the spike on the NFP, and we had a falling wedge. I could have tightened it up But here you are back at this 114 turning point. We did make a new low yesterday. I said look to accumulate around 1350, 1380. So you have some money made. I think you want to protect yourself now under 1380. Nothing wrong with taking partial profits. If you bought that break, another level is going to be about 1480. But definitely called the right move here from Monday to look to be buying this break, and this break is holding right at the 50. We start cutting through here. I think that we're headed up to 115. You know, I guess you could look at fibs. I still think there's a chance the dollar could end up failing, but we'll take it one step at a time. So if you bought it down there at 1360, you now have profit stops at 1380. And let's take a look at some fib retracements if you don't want to hold it long term for that major stop hunt. Little 3 driver here. 1, 2, 3. Halfway back is at the 1480 level. 61.8 back, 1514. When I look at this chart here on the 4-hour, we have what kind of high? Something I teach a lot. Is there a divergence there? No, there is not. That's a confirmed high, no divergence, no 3 drive formation yet. We could head up there, maybe there'll be another divergence next time. But this is a confirmed high, and having renamed the relative strength index, the real simple implicator. The implication of price and momentum making new highs is there's a high probability, nothing's ever 100%. That another high is probable that may or may not confirm. So here we are. If I just extend out this backtest line, which came off daily, next time up it's going to come in around 116.20, puts it within 100 pips of that 117 level. And sometimes on formations like this, you get what's called a throwover. So here's a wedge, you know, it looks like a rising wedge, and we could get up to the wedge line and then have a throwover to take out those stops over 117, and then maybe a major top up there, 118 to 122, something I've been talking about for a while. If you're a position trader, you have to have your stops tight now. So this was a nice little dip to buy. We didn't ride the euro down, we rode the pound down. Okay, so we rolled the pound down from the 760 level on that turnaround Tuesday. Pound doesn't look as good, as strong. So my preferred long was the, I don't know why I'm stuck here. My preferred long was the euro because I thought the euro pound could make another move up to the upside. It's having a little trouble here, but it still looks like we're in an uptrend. I'm sure this correction's over. It's going to be interesting to see where the euro pound is. If the euro can take out the high that we made up around 116, I still think there's a chance that we may not even make new highs in euro pound. We go to 122, then we're going to see 81 or so. But right now, to me, it still looks like we're putting in some type of right shoulder. I'm not sure if it's through. This could be the left shoulder here. Here's your neckline. Here's your head. But we could still retrace 61.8 or 76.4, and that's 80.23. So let's see what kind of right shoulder we get. Back under 78, it's vulnerable, and we're going to 75, 74. But for now, I'm going to go with the potential that, and a lot of it's my bias, that the euro pound could have more left to the upside. Kind of just take a little ascending triangle here. It's called a 79.20, and the low here would take us up to 79.80, which is one of the fib retracement levels. 61.8 is 79.70, 79.80. So that to me looks like destiny. Wrong under 78.50. Then we could trade back down to 78.25. My bias is for more upside. Give me a Y if you're with me. So this pound chart here, kind of late, gets short here in the pound. We did have this divergence up here. So the pound doesn't look as constructive to me as the euro does. Here's both of your 4-hour charts. 4-hour chart looks a lot better to me here in the euro than in the pound. Maybe a push. But up here I was looking for 43.60. Do we get one more shot down towards 43? It's possible. I don't want to be short the pound either. I would look for much more before I would take a short on the pound. And since I'm favoring the long side of euro, I don't need to be long both of them. Give me a wave if you're with me. So the yen was something from the turnaround Tuesday. I said the yen could rally 61.8 back. Look at this. 61.8. 109.50. I talked about it. 109.5. 110. You know, we could still try it if the dollar has a little more juice, but this to me is the beginning of some topping action in the yen. And I talked about this 107.40 level. This would be a major breakdown back under 107.40. For now, I'd be looking to sell rallies, looking for 740. We take out 740 and you're looking for the lows again and possibly lower because it's about 200 pips under here would take us back to the lows. So with my bias being that the dollar may not have bottomed and that there could still be one more washout and having a pretty directional, impulsive move, that selling strength in the end to me makes sense, and confirmation will come back under 107.40, which was the ascending triangle breakout. Give me a Y if you're with me on the yen. So here was CAD. This was a good call. We were here Monday. You know what I'm saying? We're starting to diverge here, and crude could come off, and we could pull back to 28, 27 and a half, and that's manifesting here. You know, some guys are saying if we really have an explosion in crude, that Canada could weaken severely. Some people even think the lows. I'm not there yet, but why not? Something I was talking about here on Monday, have some type of fib retracement. You know, here's one of your first targets here around 27.80. But we have to be open to, you know, crude blowing off here. How deep of a retracement are we going to get? This was a great call down here when I said buy it under the big round number of 125. It was good for almost 500 pips. So we're not even 38% back. So you really can't get tremendously bearish unless we're trading under 61.8, 26.76. And there's a possibility we get there. So we'll see, and maybe from 26.5 we launch again and eventually get up towards 33. I think before it's all over, we will be looking at possibly 133. So here's a parabolic here. Looks like 26, 27.5. Anyway, the important thing is I got you long here. I got you out here. If you're trading at counter trend, you have a nice lead. And 27.50 would be a good profit stop location, profit objective, and even from Monday you already have over 100 pips made. So we'll see crude, what kind of legs crude have and how deep this can be in Canada. But 2 weeks in a row, good calls. This was a great move, one of the strongest recoveries in quite some time, and then had the presence of mind not to say, you know, a lot of people wanted to push the Canada looking for 33 right away. I said, no, you know, this came a long way. We were having some divergences, look for a pullback, book longs, and traded counter trend. Everyone with me on my analysis of USD CAD. So the Aussie didn't quite get to my buy zone. Yeah, I was talking about maybe 72. But I did say that there could be a decent shorting opportunity, maybe up around this 74 area, getting some type of retrace. So we're getting there. Just want to give you a little bit more macro view. It'll be interesting to see how much juice Aussie has. I'm figuring 74.50 if the dollar weakens is going to be tough for it. That's old support, new resistance. So I'm not ready to bottom pick this. I just want to give you a perspective. So here's your 4 hour on Aussie. Right. And here's your 4 hour on Euro. And this is why the Euro Aussie. So here's a low in Euro. Well, during that last dollar sell-off that we called, and here's a low, and Aussie has taken out these lows. So Aussie showing much less relative strength. This is going to be a preferred short, but perhaps we get some type of retrace. I said don't short it in the hole. I didn't buy it, but perhaps shorting opportunities up here around the 74.5 level in Aussie, USD. EuroCAD, still think that there could be a little bit more upside. Looks like it's trying to have troubles here, acting kind of negative right here, maybe because of the CAD, but this double top, there was a little divergence here. Maybe we're just going to pull back to 46 before we launch one more time. It's still not in my daily range. I was thinking that we could get some type of right shoulder up here that could take it up towards this 152, 53 level. So not ready to short it. I'll call it a neutral. On EuroCAD, Euro Aussie, still not quite at the level I was looking to get short. Although we are at the 61.8 level, so very possible that we pull back towards this 150 level. Still want to see if we could fill out the rest of this descending triangle here, which is all the way up at 160. So mid-range, it's more of a scalping situation until we take out 144. I still think if I'm right about the dollar having one more leg to the downside, that perhaps we challenge the 160 level. In Euro Aussie, that would be a shorting opportunity for me, and the descending triangle line up there. And I want to just give you a quick review of the commodity markets that I mentioned. So here's the gold, kind of a grinding decline, A, B, C. Really don't know what to do with it, so I'm leaving it alone. Like I said, on the dailies, that may have been it. Another reason I don't like the Aussie. But anything could happen. We could still have one more spike up here. 1250 is the line in the sand in gold. We get under there, then we're going to take out 1200. Maybe even head towards this 1180 level. Here's the crude again. Like I said, bouncing. We had a confirmed high here, so let's see what we get out of the crude market. Maybe we have just some type of continuation over a range trade. Call this 47. Call this 3.5. So 3.5 from 6.5 is going to take us up near 49.50 bucks. I think there'll be a lot of hedgers looking to lay some hedges on at $50. So that's a range I would be watching for USD CAD. Give me a Y if you're with me. Did want to take a quick look at the Aussie Kiwi. Still doesn't look great, and we do have some divergence, but so far only 2 drives. I don't think we're ready yet, getting back over 109, but everyone that's been following me knows that I'm looking for this to be a campaign trade. So let's just a 3 driver in here. Let's call that 1, call that 2, and let's see what happens down around the 106.50 level. The reason I want to stay on guard for this is because of the weekly chart that has a very classic head and shoulders. So Still, this 105 is going to have to take out 105 to negate it. So maybe we just have a little bit more weakness down towards 106, 106.50. And if you have some divergence there, then you risk 105. And then the next time through this 113 level, the neckline, you're going to have potential to head up towards 125, 123.40. So watching this, we start taking out 105, then you're going to have 1, 2, 3. But right now, I still have to think that there's a possibility that the benefit of the doubt might be that we're still grinding out a support level. The conservative trader would just wait to break out over 113.30. Any questions on anything I've covered today? Basically, the forecast for Monday that the dollar would pull back is manifesting. We have the euro coming out of this falling wedge here, stalling so far at the 50-day moving average. So this is going to be, if you're not long from recommended levels, perhaps the dollar is going to come back here. 114 is going to be your pivot point to pay attention to. We start getting through 114, then I guess we have to be open to lower numbers. I think you might be worth a probe down here at 114 and have your stops under 113.40 and see if this breakout turns into something. Again, last week was an easier call. And again, also in Canada, you know, not missing anything here yet. So this was 2 in a row that were pretty good, right? Off the bottom where I said buy it at 475, low was 460. Said to start getting out last Wednesday, and then on Monday that we could pull back to 28, maybe 27 and a half. So if you're short USD CAD, 27.40 is going to be a decent target to book it. Give me a Y if you're with me. Any questions on any of the instruments I've covered? Outside markets, currency pairs, US dollar yen so far stalling again at the 61.8. Doesn't mean that we can't get one more push to 109.5 again. See what the BOJ could pull out of the hat, but so far we did diverge, right? Maybe this is 1, this is 2, maybe we get 3 up towards 109, 110. But this is saying that at least if you don't want to be short, don't be long. Maybe we get one more push up. So again, not an inflection point. What we're trying to determine now is, was that the low in the dollar index a week ago? We're in a pullback phase. The nature of this pullback is going to give us a lot of messages in the next few days. In the meantime, trade with a light hand. Again, inflection points don't happen every day. Trade your pivots, trade your divergences, and good hunting the rest of the week. Any questions before I say goodbye? Okay, everyone, remember that philosophy. Do the right thing today, and tomorrow will take care of itself. Good hunting, and I'll see everyone Monday.